What is a good Experian credit score? You are asking the right question, but I need you to stand up, take a deep breath, and really listen to me right now. Because if you are retired or you are about to retire, the way you think about that three-digit number has got to change. You have spent 40 years working, saving, and building a life. But now you're entering a completely different phase, and the credit game changes when the paychecks stop. Let's look at the numbers first, raw and honest. Experian uses the FICO score model, and those numbers range from 300 to 850. When we talk about a good Experian score, the official bucket sits between 670 and 739. If you are between 740 and 799, you are very good. And if you are 800 or above, you are exceptional. But here is the absolute truth that nobody else is telling you. In retirement, a good score might not be good enough anymore. Why? Because you no longer have a regular W-2 salary coming in to mask financial mistakes. When you apply for a loan, a mortgage to downsize your home, or even insurance in retirement, lenders look at two things: your score and your income. When your income drops down to just Social Security and portfolio withdrawals, your credit score has to do the heavy lifting. It represents your financial integrity. I know what you are fearing. I know the thought that keeps you up at night. You are terrified that if your score drops, you will be trapped. You fear that you won't qualify for that smaller, low-maintenance condo you want to buy for your golden years. You fear that if an emergency happens, a medical crisis, a roof collapse, you won't be able to access cheap capital, and you will be forced to drain your traditional IRA, triggering a massive tax bomb that eats away at your nest egg. That fear is real, but staying stuck in that fear is a choice. We are going to replace that fear with absolute control. Let me ask you a question. Are you making the classic retirement credit mistake? I see this happen all the time, and it breaks my heart. People retire, they pay off their mortgage, they cut up their credit cards, and they say, "Susie, I am debt-free. I don't need credit anymore." Stop. That is a dangerous mistake. If you close your oldest credit card accounts because you think you are done with them, your Experian score will plummet. Why? Because 15% of your FICO score is based on the length of your credit history, and 30% is based on your credit utilization, how much credit you are using compared to your limit. If you close those accounts, you wipe out decades of good history, and you shrink your available credit limit to nothing. Suddenly, a small balance on your remaining card makes you look like a high-risk borrower to Experian. You are trying to do the right thing, but the system punishes you for it. You need to understand exactly how Experian calculates this number so you can protect yourself. 35% of your score is your payment history. One single missed payment, just one 30-day delinquency, can knock up to 100 points off an exceptional score. At this stage in your life, you cannot afford that drop. So, what is the actionable takeaway here? How do you secure your score and protect your retirement? First, I want you to go to annualcreditreport.com or use Experian's free tools to pull your report. Do not just look at the number. Look at the data. Check for errors. Identity theft against seniors is at an all-time high, and a fraudulent account can quietly destroy your score without you even knowing it. Second, automate your minimum payments. I do not care if you have the money in the bank. As we get older, things get busy, we travel, or we simply forget. Set every single credit card to automatically pay at least the minimum statement balance from your checking account every single month. Protect that 35% payment history category with your life. Third, keep your oldest credit cards open and active. If you have a card you haven't used in years, the bank might close it for inactivity. Take that card out. Use it to buy a tank of gas or a bag of groceries once every few months, and pay it off immediately. Keep that history alive. Your credit score is not just a badge of honor. In retirement, your credit score is insurance. It is your shield against high interest rates, it is your ticket to a smooth transition when you decide to downsize, and it is your financial security blanket. Aim for 740 or higher. Give yourself that buffer. You have worked too hard to let a three-digit number dictate your freedom. Be smart, protect your credit, and stay safe.